Hi, I'm Jeff Hirsch. I'm here at the Traders Expo in New York with Garrett Patten. He's the technical analyst and chief educator at ElliottWaveTrader.net. And we have a couple of colleagues here talking about mining and other things. So I wanted to ask you about the Elliott Wave setup for the S&P 500.
Sure.
What do you see right now? What should people be looking at for the S&P short term right now and then for the rest of the year?
All right, well, I think many people are pretty aware of the violent decline that we had down into the December 2018 low, and we've had almost as violent of a rally back off of that bottom. So I think that the vast consensus out there is that the bull market is back in full force and we're ready to set up new all-time highs again. However, based on Elliott Wave theory and our technical analysis, we see something different. Although we still see a little bit more upside possible in the current move off of that December 2018 low, potentially reaching 2860 on the S&P 500, we still think that this rally off of that low is corrective, and the overall correction off of the high last year in September is not complete yet. With the potential,
going to retest that?
With the potential to actually break below the the December low and head down to around 2,200 or maybe even 2,100 on the S&P 500 before an actual lasting bottom that sets up new all-time highs from there.
So the 2815 on the S&P is a pretty formidable resistance level that we just bounced off of or struggled at. You're seeing that there. And 2200, do you see that transpiring right here in the first quarter, Q2? When does that look like? When does Elliott Wave tell us?
Probably not that quick, because the initial decline down into that December low was so fast. Usually the second portion of a three-wave corrective move is going to take longer in duration compared to that initial move down. So I would say probably in the later half of 2019, even possibly next year, that we actually see that bottom hit.
So you're not guaranteed, you're not saying that we're definitely going to test that this year and then make a new high this year. It could take as long as sometime next year to do that. Interesting, because I'm more concerned about next year than I am this year right now, with the heated election, season that we're going to see there. So S&P right now going to be struggling to break out to new highs, is what you're saying.
That is what probabilities are still suggesting based on Elliott Wave theory.
And potentially another low, blowing out the December low, maybe Q3 in that August, September, October rough patch.
Right.
Or even after the first of the year when we get into the election year. Interesting.
And we don't normally get into fundamental analysis with our services, but it's been discussed a lot that the central banks are willing to step back in with more quantitative easing if we see more struggles in the economy and in the overall financial markets.
It sure has. I think that's great analysis, and I appreciate that. Thanks very much, and thank you everyone for joining us today.
Thank you for having me.